Okay, here we are. It's Tuesday, September 22nd. There are, if I can do my math right, there are 6 trading days left in the third quarter. Today was what we call a rebound and recovery day after the sell off Monday. Although the sell off, even though the sell off Monday was pretty uneven, we spoke about it yesterday. The NASDAQ was barely down by the end of the day. Um, Clearly, it was a very pessimistic start to the day on Monday. Some of that waned as the day went on. The tech stocks led and were the largest part of the recovery during the last 90 minutes on Monday. They did follow through today. They were up out of the chute this morning, as we say, even though for decent portions of the morning, the Dow was down maybe as much as 100 points. On and off, it would rally back to even, then fall again, and it was down about 100 points. That went back and forth for the first 90 minutes, maybe the first 2 hours of the day. John, thank you for joining us and being such a great supporter. Um, and then other sectors of the market picked up as the day went on. You had Secretary Mnuchin and Fed Chairman Powell testifying before Congress. I thought that went fairly well for them. It wasn't a super high impact event, but Powell did basically say at one point during his testimony that the Fed would do whatever it could or whatever was necessary within its limitations to support the U.S. economy. It wasn't quite a Mario Draghi 2013, whatever it takes to save the euro moment. But I thought I thought the market did react mildly positively to it. And again, keep in mind, at that point in time, Mario Draghi had been the head guy at the ECB for many, many years. And Powell's been in now for at least a couple of years, maybe 2.5, maybe close to 3 years. But he just doesn't quite have the distinctive Italian accent that Mario Draghi does. So, but that was, I think, a net positive for the markets. It wasn't a monumental event. I don't think it's the only thing that helped markets recover a little bit. You had very, very strong existing home sales numbers this morning. Just clearly, the housing market just continues to be on fire. Plus 2.4% in August, running at about a 6% um, increase on an annualized basis. Just another string of positive data on the housing sector, and that's pretty much all the economic data we had today. And tomorrow's kind of a light day. Also, we'll get another piece of data on the housing market, some FHA input, and then we'll have oil inventories. And then, of course, Thursday we'll have the weekly jobless claims, and all the little add-ons that go along with that. So I want to thank everyone for joining us. If you are a first-time watcher or have just recently tuned in the Anderson Report, this is my YouTube channel. It's The Anderson Report on YouTube. I am Tim the Source Anderson. I also stream this out to Periscope at TJ Anderson 12. And if you are a first-time YouTube watcher, please subscribe to the channel. Please hit the little like, thumb up indicator next to the just below the broadcast. And if you hit the bell just to the right of the subscribe bar, you will get notifications of when future broadcasts are scheduled. So we're going to take a look at today's market action, maybe with a little bit different twist than what we usually do, because yesterday was such a down day where the Dow was down a lot more than the S&P, et cetera, et cetera. You had a recovery late in the day. And then today you had the NASDAQ out of the chute. You had the S&P, rally with a little bit less oomph behind it. And the Dow really didn't pick up its rally um, till late in the day. But we're going to look because there was so much clamoring about why was the market down on Monday. Today's Tuesday, so we're only 2 days into the week. It feels like we've almost had a full week already the last 2 days. But since there was so much clamoring yesterday about is this going to be another March? Is this the beginning of a big sell-off? Are we going to retest the March lows? What a look at all these COVID cases in the UK and parts of the continent. Let's take a look at what the market averages have done in aggregate over the last 2 days. Now, the Dow Jones Industrial Average has taken the brunt of the selling. There's no question about it. The Dow is down 370 points over the last 2 days. That's a decline of 1.3%. The Dow went out at 27,288. It's about 1% below. It's a little less than 1% below its 50-day moving average of 27,518. So keep that 27,518 number in the back of your mind. Maybe jot it down off to the side somewhere. If the Dow stages a rally over the next 3 days or so, that's a level to look at to see if there's any resistance at the 50-day moving average on the way up. So the S&P 500 had a very nice recovery yesterday. It regained more than half of its losses on the day, but it still had a 1.3% decline. So with today's rally, where the S&P gained about 1%, it closed at 33.15, spot 57. Really just about 5 points below where it started the week. And when you think about how ugly yesterday looked until 1 o'clock in the afternoon, maybe 2 o'clock in the afternoon, it's kind of remarkable. But the S&P is down a little over 0.1%, maybe close to 0.2%. It went out at 33.15. The 50-day average on the S&P 500 is at 33.48. So that's 30 points. It's 33 points. It's almost exactly 1%. So both the Dow and the S&P are about 1%, give or take a little bit, below their 50-day moving averages. Now, the NASDAQ composite. The NASDAQ composite had a nice day today. It gained 1.7%. That was a nice add-on rally to the recovery that it had Monday, where it almost got back to unchanged on the day. But on the week, 2 days into the week, the NASDAQ composite is plus 1.6%. The NASDAQ is at 10,963. It gained 170 points today. The 50-day moving average for the NASDAQ is at a nice, eerily symmetrical number of 11,011. Just over the 11,000 even marker, 11011. It almost looks like an old binary computer code. So the NASDAQ composite is 50 points from its 50-day moving average. For a market that was, throws around 200-point moves like gumballs, That's not that much. If we get a rally tomorrow, it will clearly challenge that 50-day moving average. The Russell 2000 did not rally. It has not recouped nearly the losses that it had on Monday as the other big averages. The more higher capitalization weighted averages has it did gain about 0.8% today. It's still down minus 2.6% for the week. It has a lot of work to do. We had been talking about how 1600 was a big resistance level, really just like a week ago, a little over a week ago. The Russell had got up near the above 1570. Really had a very rough end of last week and a very rough day yesterday. Clearly, if people have concerns about the pace of economic growth stalling, uh, maybe no additional stimulus package until after the election, and um, you know, maybe some smaller businesses in the Russell 2000 that don't have the immediate access to easy lines of credit and the ability to go sell bonds or even uh, in or raise money in the capital markets like higher capitalization companies do. It's easy to see why the Russell has been hit very hard over the last 4 or 5 days. The 50-day moving average is 1530 on the Russell. It closed at 1497, and it's almost exactly between its 50-day moving average and its 200-day moving average. It's above the 200-day. That's at 1460. So the Russell closed at 1497, but it's below the 50-day. I'm not going to make a call on it here. I just think that we have to watch the Russell and see where it does to see how investors feel about whether or not the economy is really slowing down from the pace that it was at the last couple of months, and whether or not might be a barometer for whether another stimulus package is coming. Now, the Dow Jones transports we started talking about quite a bit a couple of weeks ago. They've had just a monstrous move. I mean, they went from 9,000 to 10,000 in a hurry. Then they went to 11,000. Then they got within 50 points of a new all-time high. The Dow Jones Transportation Average, unlike the Dow, unlike the um, S&P 500, unlike NASDAQ, has not posted a new all-time high since September 14, 2018. That's about 2 years and 2 weeks ago. But the transports um, had a decent day today, but still down 1.9% on the week. They had a very ugly day on Monday. Let me just look at this a second here. Yeah, they didn't have that great of a day today. They got some of their losses back. They gained about 85 points. They lost 300 points on Monday. They gained about 85 points today. On Monday, the transports were down 2.65%. They're up about, they got a little bit of that back today. They're still down 1.9%. That the airlines did not rally that much today. And I didn't take that close of a look at the railroads and even stocks like FedEx and UPS, which have benefited from the buying at home phenomena and having deliveries. These stocks and some of the rails have been at or near all-time highs. So maybe a little bit of profit taking there. Let's watch the transports the rest of the week. So the breadth numbers yesterday were negative 6 to 1. The Dow gained about 140 points today. Today, the advanced decline stats for the New York Stock Exchange were plus 1,700, minus 1,300. It's okay. It's not even 3 to 2 to a positive. On the NASDAQ, the advanced decline numbers were even, same amount of gainers as losers. You can tell that in NASDAQ, what drove NASDAQ higher today was the same theme that drove it higher for off the March lows, and the same thing that had driven it to new highs early in the year and had it outperforming over the last couple of years. The big mega cap, mega growth technology names that, particularly since the whole coronavirus economic shutdown scenario, have really helped drive and been beneficiaries of what I've called the internet traffic trade. Amazon up 5.7% today. Amazon rallied 168 points today. It was up 5.7%. It got an upgrade by a very well known analyst on Wall Street to outperform from market perform. So the stock gained 5.7%. Now, I get questions all the time. Why isn't Amazon in the Dow Jones Industrial Average? You could make an argument that it should be there. And it's very possible that at some point in time in the future, it will be in the Dow Jones Industrial Average. It's clearly one of the top market cap stocks in the S&P 500. But I will tell you that Amazon will never be in the Dow Jones Industrial Average unless it splits its stock at least 10 for 1. Amazon's trades over $3,000 a share. It rallied 168 points today. So if Amazon was in the Dow Jones Industrial Average, that would have had a positive impact on the Dow Jones Industrials of 1,100 points. And that in and of itself is why the people at Dow Jones, really it's owned by Standard & Poor's, will never put Amazon or any other $1,000 plus stock in their average, because it's a mathematical average. It's an arithmetic average. It's not a market cap average. And it's changed a little bit. The number has actually gone down since all the changes that they made at the end of August, where you had Salesforce go into the Dow. You had, I don't know if I can do this or not, Raytheon go into the Dow. And then you had one other stock go into the Dow. You had Pfizer come out. You had Exxon come out. And then you had another stock come out. I don't have all the names in front of me, and I can't just think of them off the top of my head right now. But basically, a 1-point move in any stock in the Dow is a 6.6 point move. The Dow moves 6.6 points, like just over 6.5 points for every 1-point move in a stock. So if Amazon was in the Dow and it rallied 168 points today, that would have been a positive impact on the Dow of 1,100 points. And it would just be ridiculously volatile and too ridiculous of a dominant factor on whether or not the Dow was going up or down that day. Okay, so a couple of other a couple of other items. Apple, why did the NASDAQ rally so hard? Apple was up, rallied 1.6% today. It had rallied 3% yesterday. And you had other, Facebook was up, Microsoft was up, all the typical names were up, and that helped push. You can tell that the NASDAQ rally was a little bit narrow, with the index gaining 1.7% today and the advanced declines of all the 3,400 stocks in the NASDAQ composite, basically even the same amount of gainers as losers. In terms of sector performance, consumer discretionary is very strong. They had been weak for a couple of days. They're up 3% today. Communication services, that's your internet traffic trade, up just under 2%. Info technology, ditto. Internet traffic trade up 1.7%. Industrials up 1%. They've been beaten up pretty good for a couple days. Worst performers, kind of a lot of what we saw in August. Energy down 1%. Financials down 0.8%. Financials still struggling off this just awful story that went around Monday morning on the big global banks being negligent on hundreds and maybe even thousands of money laundering cases. I think that story is going to go away. I don't know that there's going to be big. A lot of these incidences were from well over 10 years ago. And I think a lot of it has come to light because some of the European regulators are rewriting their AML standards, similar to the way the regulators did in the U.S. Pretty much 15 years ago or so. But that being said, the banks have certainly not been a place to be the last couple of days. And energy down 1%, despite the fact that crude oil rallied today, up 40 cents, 1%, up to 39.72. Crude oil a week ago was probably 37.5, coming off the lows from the day before. A week ago Monday, crude oil was between 36.5 and 37. It rallied a week ago Tuesday up above 37, maybe close to 38. Then it got hit hard late in the week and on Monday, and now it's back up. So I like the fact that crude oil is up. I think that should help the market. Now I mentioned consumer discretionary up 3%. It might do well again tomorrow because Nike is a Dow Jones Industrials member. It's also a component in consumer discretionary not really a sub sector, but sector of the S&P 500. Nike was up 3% today, and that was before their earnings after the bell. Nike reported blowout earnings after the bell that really caused the stock to rally another at least 5 to 6%. I didn't look at it in the 30 minutes to an hour before this broadcast started, but I looked at it around 4:30, 5 o'clock, and it was up after its earnings report 5 or 6%. They had very strong sales in China, up 6%, and that pretty much overweighted their US sales being down 2%. They beat on both revenue and their bottom line earnings number. Couple other stocks worth mentioning. Zoom. I noticed that Zoom did make an all-time high today. That's pretty remarkable given that it trades at a very high valuation, although clearly it is a beneficiary of the internet traffic trade, people working from home, people having conferences at home, people doing media interviews from home. I think I did 2 Zoom media interviews yesterday. The stock made a high today. And I did notice that a number of other names in the cloud space were strong today. Okta, I believe, is the name of the company. And then there's another one that escapes me right now. Salesforce is probably up today, although I didn't notice it. And of course, we had that very hot IPO last week called Snowflake. That's a cloud name also. probably the fact that that stock came at such a high valuation is helping the valuation of some of the other names in the cloud space, although a lot of people would say they are already extended. So, John is asking a question here. Any chance Trump rejects the TikTok deal for the best interest of national security? He should reject it. Yeah, John, I mean, there's certainly a chance of that. I would imagine that he's going to get a lot of input from key trade representatives, from Secretary of Treasury Mnuchin, who really the CFIUS review process falls under his authority. He chairs the CFIUS group, which is the group that looks at any foreign ownership of a U.S. company. And although TikTok is not a U.S. company yet, they're trying to make some version of it a U.S. company. And I think that the big argument seems to be, look, Charlie Gasparino's been reporting on this almost twice a day for the last week. He thinks it's a nebulous deal. I think that people like, from what he's saying, there's a big argument going on within high-ranking administration officials and or cabinet members that have some input on this, that they don't like the deal. They don't think it passes the muster of the benchmark that Trump threw out there weeks ago, that it had to be a U.S. owned entity to the extent that you would not have the possibility of information on U.S. users going directly back to the China and or the Chinese Communist Party, who is thought to be behind ownership in TikTok currently, which is this company called ByteDance. I am certainly not an expert on it, but I am sure that if there is enough documentation and enough vetted investigation that a Oracle Walmart combination owning TikTok's interests in the US, if that doesn't put up a wall, of course, I won't use the term Chinese wall, but if that doesn't put up a wall in the in the somewhere in the code of TikTok that doesn't prevent information and data on the, what is it, tens of millions of users in the US who use TikTok currently, if that doesn't prevent that data through some type of a electronic wall in the code of TikTok of sending information back to ByteDance and or the Chinese Communist Party and or the leadership of China, then I think that they will be forced to restructure the deal or nix it. So it's a very tough thing to go through. I think it's a completely different argument than the WeChat issue, which is an app that I think millions and millions of people use on I'm getting some comments here off to the side from people I don't see in the chat. And if I don't see you in the chat and you're in the chat, I certainly apologize. We had this issue about 3 weeks ago and we fixed it. And I'm guessing there's a lot more people in the chat than I really see right now. but I got to apologize for that and look into if this is the same issue we had a few weeks ago. Uh, so, John, I don't have the answer to that question. I think this is going to have to be very thoroughly vetted before it is signed off on. Um, I like the idea that Oracle is involved as a potential buyer just because I think that Larry Ellison's a very, very smart guy and a very thorough guy. I think he has certainly not pushed the envelope as hard as he possibly could on building out aspects of his uh, cloud business, which is extremely vibrant from what a lot of people have to say. People who know a lot more about than I do, that's for sure. Um, but look, I think we're weeks away from resolving that. I think the deadline on it's going to be pushed out a little bit. And I believe I saw something that they pushed out a deadline away from the court decision, away from the court throwing up a temporary injunction. I think they're pushed out any final determination on WeChat until after the election. I think they've got enough things to deal with before now in the election than deal with the WeChat controversy. Um, anyway, I don't have a whole lot else right now. I think that the thing to look at tomorrow is, can NASDAQ continue through with this 1 day and 1 day and a half rally off the lows Monday? And can the S&P, Dow Jones maybe get back above their 50-day moving averages? They need about a 1% rally on each to get to that level. And can the Russell repair any of this major damage that it's been done to the small cap benchmark? Easily now, what, 6 to 7%? Still down over 10% year to date. It had made a very, very strong recovery throughout August uh, and it's just the Russell's just struggling. So, and the financials are struggling also. Those are the two sectors we want to see a little bit of improvement in. I am going to be at a different location the next few days. I'm going to try to do a broadcast tomorrow and Thursday. There's a chance that it might be later than 7 o'clock, but I will put notifications out. So look for those. If this is the first time you're watching the show, please subscribe to the channel. Hit that red subscribe bar on YouTube. Hit the little bell next to it. You'll get a notification of when the next broadcast is. Hit the like button. That all goes into our positive data. Everyone's been very, very good with that. I certainly appreciate the support. And I am Tim the Source Anderson. This is my YouTube channel, The Anderson Report. I also go out over Periscope on TJ Anderson 12, and my Twitter handle's TJ Anderson 1. Everyone enjoy the rest of your Tuesday evening, and we will talk to you most likely tomorrow, hopefully also on Thursday. It'll be from a slightly different location. I'll put notifications out. Thank you very much and have a good evening.